The stock market is moving down. Bitcoin's moving down. This has definitely lost its shine. And when you look at it from a big standpoint here, there's obviously, cycles here. We're seeing cycle lows in Bitcoin, and you could argue here this potentially is a cycle low. It's still making a series of higher lows and higher highs, but this feels like the momentum is definitely shifting here. If the stock market does correct and go into a big sell-off, we're going back down to like 55,000. Actually, I think we're coming down to about 49 or 48,000 somewhere is what this chart pattern is pointing to. So there could be a very big unwinding effect. We'll just have to see how this unfolds. But overall, it doesn't look the greatest, and it's definitely not moving with precious metals. It is moving with the NASDAQ. In most cases, we see selling in the financial space. Bitcoin is moving down. I think a lot of people who moved into Bitcoin over the last several years are now out of crypto or not that interested in crypto, and they're focusing on the precious metals and mining space. And so crypto's just kind of lost its shine. Everybody wants to be into silver, gold, all of that stuff that's ripping higher, not something that's floundering and underperforming and just not providing any real return here. Equities markets in the US weren't open. We did see futures move, and we saw about 1.5% drop in the equities market yesterday. Today we're seeing a little bit of continued selling. We did see quite a bit more selling earlier this morning as the market kind of had another nose slide with Trump and his decisions about tariffs and all of his threats going on, definitely moving the markets. If we look at a couple different things, let's just look at the 30-minute chart for a minute of the S&P 500. We dip into these lime green areas, which are short-term oversold areas. Yesterday, the market had a big gap down. It's oversold. Today, it's set to open even lower. Definitely a sharp drop. Of course, it's tariff stuff. It could turn into something much bigger, potentially, depending how all this unfolds. But we do have a big gap down from yesterday. Or from yesterday, and we're going to see a bit of a gap down again today. And typically, when you're in an uptrend and you have big gaps to the downside, especially when it happens on a day where North America equities markets aren't open, which is the futures, we tend to see these gaps get bought back up. So we'll have to see how this unfolds. If we look at the daily chart, you can see the price tags the 50-day moving average. A lot of times it ends up having a very sharp recovery.
As panic spreads in equities, capital flows into safe havens. Gold rose roughly 3%, while silver surged over 7%, reflecting heightened demand for tangible assets. Platinum and palladium gained momentum, forming chart patterns signaling potential breakouts, with platinum leading the move. A weaker US dollar, pressured by tariff concerns, fuels precious metal appreciation. Energy commodities like natural gas skyrocketed 25%, while oil made modest gains. Investors seeking protection are rotating into these markets, illustrating a flight to safety dynamic. The interplay between currency weakness and commodities reinforces traditional hedges, showing how geopolitical risk reshapes portfolio priorities in real time.
So we're going to see a lot of fear carry over today at the open. It might sell off in the morning. If we take a look at the VIX, this is what we've been kind of waiting for. If we look at the daily chart of the VIX, we had a huge spike up in the VIX yesterday. It's spiking up again today as we get closer to regular trading hours where everybody can bail out of their trades and panic out. That's the fear that's ramping up. So news happening somewhat over the weekend. It's a news-driven move, huge gap down. People are lining up to get out, and they're already starting to sell in pre-market. That could signal a short-term oversold move, and maybe all of this news is getting priced in to the market and we see a rebound. But anyway, lots of volatility to be expected in this market condition that we're in. And fearful money is definitely running for safety, which is into gold. We've got gold up 3% from more or less Friday's close. We've got silver up 7.25%, having a big move up here. So we continue to see money move into these spaces. We also have platinum and palladium up about 4% each. Both of them are building this pennant formation, look primed and ready to pop and break out and have a move. They look, I like platinum more so than palladium. Let's take a look at palladium real quick. Palladium, a lot more damage kind of done to the chart, and I'm not a fan of it as much as platinum, but definitely seeing the space move.
Long-term treasuries faced downward pressure, forming bearish patterns that could hint at further declines. European displeasure with U.S. tariff policy raises the prospect of treasury sales abroad, adding to market uncertainty. Technical analysis shows bear flags, suggesting possible short-term weakness despite a longer-term base-building phase. Bond markets are grappling with policy uncertainty, potential rate adjustments, and global responses to U.S. trade actions. Traders must navigate conflicting signals. A historically defensive asset is now vulnerable, emphasizing the interconnected nature of geopolitics, fiscal policy, and fixed income markets. Market participants watch closely for signs of capitulation or stabilization.
Now, obviously, I think we're seeing some of this news really play into energies here. We've got natural gas from the Friday's close up about 25%. So a huge move for, for natural gas. We got oil up 1%, trying to find a bit of traction here with all the news and chaos going on. One of the big movers here is actually the dollar. Obviously, the last time we had the tariff news, if we zoom out on the dollar index, we saw the dollar crumble and get revalued with the tariffs. So today we're seeing a big drop in the dollar based on the tariff news and how, if all this is going to start up again and how that is going to unfold. And of course, a big drop in the dollar naturally helps precious metals move up. So that's kind of where we are in a nutshell. Let's go take a look over at TLT at the long-term Treasury bonds. We've got big moves to the downside. These are somewhat bearish. This is a bearish-looking formation pointing to potentially lower pricing. We talked about this a while ago that in the big picture here, it's trying to carve out a bottom. But when something's in a stage one base, it really just meanders around. You don't know which way it's going to go. This chart pattern at this point is a series of bear flags, and this could point to a pretty big unwinding and bring us back down to these lows that we talked about a while ago. And of course, there's some threats here from the European countries, very angry with what's going on with the tariffs in Greenland.
The utility sector, long out of favor, is showing renewed strength, signaling a cautious pivot among investors. When utilities outperform equities, it often foreshadows broader market pullbacks. Simultaneously, small and micro-cap stocks are losing momentum, reflecting reduced risk appetite. Moving averages and bull flag formations in utilities suggest potential short-term gains, but these are counterbalanced by overall market volatility. Sector rotation highlights changing investor sentiment, from high-risk growth to defensive positions. Monitoring these shifts provides insight into impending market stress and potential pullbacks in major indices, offering strategic opportunities for risk-conscious traders.
Talking about how they might just dump U.S. Treasuries. And so that could be part of the reason we're seeing this move down as well. So definitely things getting stirred up. It's going to be a volatile week. And I think potentially Wednesday, we could see Trump pick a new Fed chair. So we'll see how all this moves going forward, but expect volatility, lots of chaos. We're probably going to see our panic selling and FOMO indicator ping pong around. Probably see some panic selling this morning, which could be a good thing. We'll just have to see if this is a little news-driven gap down in equities that really just gets bought back up and it's a short-term blip from some noise, or is it going to change the tide and change the trend? We'll just have to wait and see. One other sector here that we usually like to look at to get an idea for market sentiment. Now, this is the utility space. Generally, when people start to get nervous, we see utility sectors start to perform very well. And it has been out of favor for a while, and we've been seeing the stock market more or less move sideways and higher, while utilities been moving down, and we've been seeing small caps and micro caps moving up, utilities moving down. People are wanting to take a lot of risk. They're expecting much higher pricing. But now we're starting to see things kind of change here. We're seeing the utility space have this impulse move. So it's have a nice move up, breaking through a couple previous highs here. Now a pause and pullback could be an opportunity for this to start to move higher. And as utilities move up, that usually means the stock market.
Copper illustrates a classic three surges pattern. Repeated rallies followed by sharp pullbacks, often signaling near-term topping and increased volatility. Fibonacci levels and trend analysis suggest the market has entered an emotional climax phase, with potential corrections ahead. These price dynamics mirror investor anxiety across commodities, where momentum is fragile. Traders in copper, along with other cyclical commodities, must assess risk versus reward carefully as resistance levels approach. Tariff news and geopolitical risk compound volatility, emphasizing the need for disciplined position management. Overall, commodity markets reflect a broader narrative. Exuberance meets uncertainty, creating short-term extremes and possible unwinding.
Is getting closer to a bigger pullback if the utilities start to outperform the S&P 500 and the NASDAQ. So this is starting to look like it's trying to build a bull flag. When we look at the moving averages, obviously, they're pretty much, we got the long-term sloping up and we got a real kind of bow tie, a real mix of moving averages. But over the next few sessions, these things could pan out and level out. We might start to see utilities come back into favor and put in one of these type of runs, one of these outperforming moves, which is usually a sign that we need to be aware. Fears climbing and the markets, the equities markets, might be getting into some much bigger turmoil. Last but not least, let's take a quick look over at copper. Copper has got these, what I call three surges to a high. So you have a strong rally followed by a very sharp pullback, another rally to a nominal new high, and then a very sharp pullback, and then another poke to a new high and a sharp pullback. That's usually a sign that is very close to topping, and we could start to see big red bars and some unwinding here. So it's an interesting price action. I'm not a fan of that type of price action. It's showing increased instability, volatility, risk, all of that stuff. So I'd be aware if you're in that space, just looking at these series of highs, you could really just kind of draw a line and kind of connect these levels. It's kind of in nosebleed territory. Who knows, for all we know, this line continues right through here, although I hate
Bitcoin and other cryptocurrencies are decoupling from traditional safe havens, moving in tandem with equities rather than precious metals. Recent price action points to potential cycle lows near $48,000, $49,000, suggesting vulnerability if equities continue downward. Momentum is waning as investor interest pivots toward gold, silver, and mining assets. Crypto, once a high-flying alternative, is now exhibiting reduced resilience during broader market stress. This divergence underscores a growing trend. Risk capital is migrating to tangible, inflation-protected assets. The market narrative is clear. Traditional hedges regain relevance, while digital assets face renewed scrutiny amid heightened uncertainty and global economic volatility.
Connecting really long trend lines like this, people just keep redrawing them. It's kind of like Elliott wave theory. Everybody just keeps redrawing a new wave every time it proves wrong. Moving out trend lines like this, they're okay from very high level, just like we're looking at now. It's not like we use it for trading, but it just goes to show we're pushing up into a resistance area that we should be aware of. If you're in the copper space, this is not a bad spot to be locking in gains before we see some big red bars and some unwinding of this recent rally and push. And just looking at the copper space using Fibonacci, we can look at the rally up and this pullback. You can see we've hit the 618. It had a pause there. It hit the 100% measure move. Now we're in the emotional topping phase, which is usually what happens right after that. And then we see the market go into either a bigger correction that takes months, or it goes into it creates a top and unwinds. So just be aware if you're in the copper space. It looks like the music's coming to an end for kind of, if you're expecting this to keep ripping higher, I don't see that happening. Obviously, there's tariffs, there's all kinds of other stuff going on that could spark some big moves in copper still. But if you're just going from a logical chart pattern, just follow the money. This move is over, and now it's just in kind of blow off noise phase at resistance when you look at the moving trend lines as well. One more thing here. Let's just touch on Bitcoin really quick. Bitcoin is down about almost 5%. Again, it's not showing, it is not digital gold. We just continue to see this big bear flag kind of unfolding. The stock market is moving down. Bitcoin's moving down. This has definitely lost its shine. And when you look at it from a big standpoint here, there's obviously, cycles here. We're seeing cycle lows in Bitcoin, and you could argue here this potentially is a cycle low. It's still making a series of higher lows and higher highs, but this feels like the momentum is definitely shifting here. If the stock market does correct and go into a big sell-off, we're going back down to like 55,000. Actually, I think we're coming down to about 49 or 48,000 somewhere is what this chart pattern is pointing to. So there could be a very big unwinding effect. We'll just have to see how this unfolds. But overall, it doesn't look the greatest, and it's definitely not moving with precious metals. It is moving with the NASDAQ In most cases, we see selling in the financial space. Bitcoin is moving down. I think a lot of people who moved into Bitcoin over the last several years are now out of crypto or not that interested in crypto, and they're focusing on the precious metals and mining space. And so crypto's just kind of lost its shine. Everybody wants to be into silver, gold, all of that stuff that's ripping higher, not something that's floundering and underperforming and just not providing any real return here.